Bismillahirrahmanirrahim. Assalamu alaikum. Today, in this particular lecture, we will continue our previous topic, which is legal consideration regarding the auditing. And today, particularly, we will discuss about the rights, duties, and liabilities of an auditor. So, let's begin with the material in this particular lecture. Powers and rights of an auditor are discussed under the section 255 of the Companies Articles 1984, and we will discuss in light of those acts. The first power or the right of an auditor according to section 255(1) is the right of access to books of accounts and vouchers. This include all the books of accounts, that is financial statements, whether it is balance sheet, income statement or other financial statements, and including the vouchers and receipts which provide the evidence for those recording. So the auditor can ask and verify all those voucher receipts along with the recorded financial statements and entries in the journal books and to tally them. So the company would not any reason to give these information to the auditor. Similarly, the auditor has the right to receive information and explanation. If the auditor is not satisfied with the books of accounts and vouchers and receipts, so the auditor can ask for further explanation and information, and the company will provide on demand to the auditor these data or information. The auditor has the right to access the books and papers of branch. This is under the section of 255(2). So not only the auditor can access and verify the books of accounts of the company, but the auditor can have also the right to verify and look or access to the books and papers of the branch of the company or the subsidiary in that case. So the company is responsible to give access to all the documents related to the branch or subsidiary of the parent company. Similarly, the auditor has this access to receive notices of general meetings and to attend those meetings. We know that in the company they have some annual general meetings which are conducted on yearly basis. Similarly, there may be some other common meetings. So the auditor has this right to receive the notices, minutes, and every information regarding those meetings, and he has also this right to sit and attend these meetings. Finally, the auditor has the right to representation where another person is being appointed as an auditor. So the ex-auditor or the former auditor will still have this right to sit or represent in case he has been replaced by some other auditor or a new auditor. So the old auditors still will have this right to represent. Now let's discuss about the duties of an auditor. Duties of an auditor are explained under the section of 255(3), which are: number 1, to give a report to the members on the accounts, books of account, balance sheet, and profit and loss account examined by him. So the auditor, the basic purpose of the auditor to examine all the books of accounts and the financial statements, etc. So he is responsible, and this is his duty, that he will give the report to the members. Members means the shareholders, about all the books examined by him. Second is, where any matter reported upon is answered in the negative or with a qualification, the report should include reasons for such qualification of the factual position. So anything is reported by the auditor must be supported by some factual evidences or some logics to include in the report of the company such matters directed by the federal government. So this is also the duty of the auditor, that he will include any directions given by the federal government to the companies. For example, if the government wants to deduct the zakat or the taxes, so the auditor will also include all that information in the report, or in this case any other information. Finally, the auditor has this duty to attend those general meetings of a listed company, either himself or through authorized person, in which the balance sheet, profit and loss account, and auditor's report are to be considered. So, in any meeting where the financial statements or the report of the auditor has been discussed or considered, the auditor has this duty to attend those meetings, or if he or she cannot, then he or she will authorize some other person on behalf of him or her. The second category of the duties is to make report for inclusion in prospectus. This is under the section 53. What is prospectus? Prospectus is basically the invitation document to the general public for the offering of the shares. Whenever the company offer the shares to the general public, company do this by issuing the prospectus. So the auditor is responsible to include his report in the prospectus as well. His audit report, which has been compiled by him regarding the company financial position. So that must be included in the prospectus, which is offered to general public. Similarly, to certified receipts and payments accounts in the statutory report. So, in the statutory report of the company, the auditor must certify the receipts and payments. Next is to make report on declaration of solvency in case of voluntary winding up. There are types of winding up of the company. In other words, if the company wants to close down, so it can do it by voluntary basis. So if the company wants to wind up, the auditor is responsible to declare the solvency report of the company if that company is solvent. Finally, to exercise reasonable care and skill in carrying out his duties and make such inquiries as considered necessary. Now, the auditor is responsible to pay due care and use his best skills in carrying out the duties, all his duties regarding his auditing position. Now, this is something general but related with the duties of the auditor. That is reading and inspection of auditor's report, section 256. Auditor's report shall be read in the general meeting and shall be open to inspection by the members. In every general meeting, the auditor's report, which is compiled, would be read in the meeting and should also be inspected by the members. Members mean the shareholders. Signature and date of auditor's report under section 257. The person appointed as an auditor shall sign the auditor's report or other documents required under the report should indicate the date and place. So these are also the duties and responsibilities of an auditor to ensure that the report has been duly signed and the date has been placed. And similarly, the place of signing the report should also be mentioned. Audit of cost accounts, where a company is required to maintain any records relating to its cost of production. Alternatively, it will also get these accounts audited. The auditor in this case shall be chartered accountant or cost and management accountant. So the cost account of the company should also be audited, and that auditing should be performed by the chartered accountant as usual, or if that chartered accountant is not available, then the cost and management accountant will perform this auditing of the cost accounts. Now let's switch to the another major topic, that is auditor's liabilities, the responsibilities. Liabilities of an auditor of a company can be studied under the following heads. Number one is civil liabilities, and the other, which we'll discuss in the next slides, is the criminal liabilities. Under the civil liabilities mean the disputes or losses caused to one party by acts of another. The civil liabilities of an auditor can be of negligence and misfeasance. So we will discuss them one by one. Number one is liability for negligence under law of agency. Auditor, being agent of the shareholder, is required to carry out his duties where reasonable care and skill. Sorry, with reasonable care and skill. If he fails to do so, he is liable to make good any loss caused to the third party. So these kind of liabilities are due to the negligence, and the negligence can be in the form of carelessness or not using the reasonable skill of the auditor in performing his duties. Okay, there is an assignment which has four different cases, and you have to provide the solution to these points by how the auditor committed liability of negligence in the following cases. So you have to go Google them and read them, and then write in your own words that what was the negligence of the auditor in these cases. The one is Arthur and Green Company versus Central Oil Advance and Discount Corporation Limited 1920, the London Oil Storage Company Limited versus Sears Asluck and Co. Irish Company Limited versus this is the third one, and this is the fourth one. Kingston Cotton Mills Company Limited and Maxon versus Robbins American case. So these are easily available on the Google. So this is kind of your reading assignment and a writing assignment, because you will read and write in your own words about the negligence of the auditors in all these cases. The next major type of liability is the liabilities for misfeasance. The term misfeasance means breach of duty. If auditors does something wrong in the performance of his duties resulting in a financial loss to the company, he is guilty of misfeasance. For example, an auditor's duties are laid down in Section 255 of the Companies Ordinance 1984. If auditor does not perform his duties properly and the company suffers losses, he is liable for misfeasance. So here there are three things. Number one is the auditor is not performing his duties with care and reasonable skill, and if he does so, um, so in other words, his duty is breached, and due to this negligence, the company can face losses, and if the company face losses, he will be liable. There is a case of London and General Bank Limited. In this case, auditors were held liable for misfeasance. Now, this is a particular case where the misfeasance liability of the auditor has been discussed. The auditor failed to report that balance sheet was not properly drawn. Large sums were advanced to the customers and interest thereon was accrued. In fact, neither advance nor accrued interest was receivable. No provision for bad debts was made and the company paid dividends. So there are three important adversities happened. The first thing is the auditors failed to report the balance sheet was not properly drawn by those clients. Large sums were advanced to the customers and interest thereon was accrued. So obviously, based on the auditor's report, the financial firms extended their loan. In fact, neither advance nor accrued interest was receivable. So that both advance and interest were not receivable from these clients. No provision for bad debts was made by the company paid dividend, and even the bad debts were not created by the company. So, under Section 260 of the Companies Order in 1984, if the auditor failed to report the members' material misstatement of facts or give untrue picture to the members and the default is willful, auditor shall be punishable with fine. We will discuss about the fine limits and the penalties in the further slides. Criminal liabilities, according to this heading, Section 260 says if auditor fails to comply with the requirements of Section 157, 255, and 257, which are discussed here. 157 means to certify receipts and payments on account in a statutory report. 255 means to give auditor's report, and 257 means to signature and date on the auditor's report. All these three are enforced through law. If the auditor is failed on any of the section, he shall be punishable with a fine of rupees 100,000 if he knowingly makes a false report for profit to himself or to put another person to an disadvantage or loss for material consideration. He shall also be punishable with imprisonment for a period of 1 year. Under Section 417, if charges of forgery are brought against an auditor, he may be liable to imprisonment for a term which may be extended to 2 years or fine up to rupees 220,000 or both. So, under the Section 492, if in any report the auditor makes a false statement, he shall be liable to imprisonment for a term up to 3 years and fine not exceeding rupees 20,000. There are few things; these are very legal and technical things. We will discuss them in further detail. Auditors may face negligence claim under two distinct branches. Now, broadly, the negligence of an auditor has been divided in two major categories: negligence towards the client or the company, and negligence towards the third party or the others people. So, the clients can, with the auditor has a law of contract with the clients, and the auditor has the law of tort with the others. So, auditors can be sued by the company under audit or the bank creditors, shareholders, which are the third party or the others. If the auditor breach this contract or is liable for the negligence under the law of tort. तो यहाँ पे जो बात की जा रही है, I would like to tell this in the Urdu because थोड़ा सा ये टेक्निकल होता जा रहा है. तो जो ऑडिटर्स हैं, ऑडिटर्स की जो रिस्पॉन्सिबिलिटी बनती है या उनकी जो लाइबिलिटी बनती है, वो दो तरह से हो सकती है. एक तो उस क्लाइंट के लिए जिसके लिए वो ऑडिटिंग परफॉर्म कर रहे हैं, और दूसरा थर्ड पार्टी के लिए जो मतलब अदर देन द क्लाइंट हैं, लेकिन वो भी किसी हद तक इनडायरेक्टली इन्वॉल्व हैं, जैसे कि बैंक्स हो गए, क्रेडिटर्स हो गए, शेयर होल्डर्स हो गए. तो जो ऑडिटर है उसका जो रिलेशनशिप है विद द क्लाइंट और द कंपनी, दैट इज द लॉ ऑफ कॉन्ट्रैक्ट के जरिए से है, और थर्ड पार्टी के साथ जो उसका रिलेशनशिप है दैट इज अंडर द लॉ ऑफ टॉर्ट और नेग्लिजेंस है. अब इसमें बैंक्स और क्रेडिटर शेयर होल्डर्स आते हैं, इसमें कंपनी आती है. अंडर ऑडिट जो है, और ऑडिटर को ये दोनों सू कर सकते हैं, इनके ऊपर कोर्ट में केस कर सकते हैं अगर इनके साथ लॉ ऑफ कॉन्ट्रैक्ट ब्रीच हो और इनके साथ लॉ ऑफ टॉर्ट हो विच इज नेग्लिजेंस हो. तो इन दो केसेस में तो ये तो हम डिस्कस कर चुके हैं कि मुख्तलिफ तरीक़ों से होता है, लेकिन नाउ वी विल डिस्कस अबाउट दिस लॉ ऑफ टॉर्ट. ये क्या चीज़ है? पहली बात ये कि ब्रीच ऑफ कॉन्ट्रैक्ट विद कंपनी. Contract breach is when failure of one or both parties in contract to fulfill the requirement of the contract arises. Now let's suppose there are two parties. One is the auditor and the other is the company under audit. So if one of them is failed to fulfill the requirements of the contract, then the contract will be breached. An example is the failure of CA firm or chartered accountant firm to deliver a tax return on the agreed upon date. Let's suppose the client has asked for the tax returns on a particular date, but the CA firm could not submit it submit the report on that particular date, so the contract will obviously be breached. Typically, the chartered accountant firm and client sign an engagement letter to formalize their agreement about the services to be provided, fee, and timing, but they are unable or fail to do so. So again, the contract is breached. Now, what is liability in tort, which is discussed, and we said that this is the liability of the auditor towards the third party or others other than the firm under audit. Now, what is the liability in tort? Basically, a tort can be defined as a civil wrong other than the arising under contract law, giving a rise to a claim for damages. Now, the auditor has a contract with the firm under audit, but he has no contract with the other parties. But still, if the other parties are suffered or receive damages due to the act of auditor, so the auditor will be responsible or will be held liable. If a person is to successfully make a claim against the auditor in the tort of negligence, the failure of auditors to meet their obligation, thereby causing injury to another party other than the audit client. So if in the case that the other, let's suppose other party has, the third party has the successful claim against the auditor for the tort of negligence, and the auditor is failed to meet the obligation, and due to that, the third party has been suffered or injured. A typical tort action against a chartered accountant firm is a bank's claim that an auditor had a duty to uncover material misstatement in financial statement that had been relied on in making a loan. Let's suppose there is a company for which the auditor has performed the auditing, and all the financial statement has been certified by the auditor, and the auditor reported that the firm is okay, and the bank, the financial institution, has given a loan to that particular company based on the auditor's report, and later on it is found that the company is not sound, and the auditor report was not fair and true, and the bank, let's suppose, suffered a loss in the form of principal advance and the interest accrued. So in that case, the auditor will be held liable. However, there are three conditions to be met in this particular regard if the bank actually claims the injury or the damage over the auditor. So the negligence requires, number one, duty of care exists, that is, the auditor indeed has this duty of care for the company or the bank. Second, duty is broken, the auditor does not perform his duty with due care and scales. And finally, the loss or damage is resulted from this negligence. ये तीन conditions जब satisfy होंगी तो auditors will be responsible. Duty of care exists. Whether the auditor owed a duty of care to the plaintiff, duty is broken, that the auditor did not exercise a reasonable degree of skill and care and circumstances. Loss or damage results. It is usually a question of demonstrating that the person making a claim of suffered a financial loss as a result of careless auditing. ये तीनों बातें हम डिस्कस कर चुके हैं. Let's suppose we are taking a case, for example, Jeff Fasteners versus Max Bloom, 1980. The plaintiff, the person filed a suit, the auditor, acquired the share capital of the company. The auditor accounts due to the negligence of the auditor did not show a true and fair view of the state affairs of the company. It was accepted that at the time of the audit, the defendant auditor did not know the plaintiff, but did not know that did know of the plaintiff, but did not know that they were contemplating a takeover by bid. तो यहाँ पे एक कंपनी दूसरी कंपनी को एक्वायर कर रही थी, और जिस कंपनी को एक्वायर किया जाना था उसका ऑडिटर ने एक ऑडिट रिपोर्ट सबमिट किया हुआ था. तो ऑडिटर को जो कंपनी एक्वायर कर रही थी उसका तो पता था, लेकिन ये पता नहीं था कि ये एक्वायर कर रही है। सो व्हाट हैपेंड, whilst recognizing that auditors owed a duty of care in this situation, it was decided that the auditors were not liable because the plaintiff had not suffered any loss. क्योंकि उस ऑडिटर की रिपोर्ट में फ्लॉस थे, वो केयरलेसली बना हुआ था, लेकिन उसके बावजूद जो एक्वायरर है उसको कोई लॉस नहीं हुआ, कोई फाइनेंशियल लॉस नहीं हुआ। दो के ऑडिटर जो पहली दो कंडीशंस हैं कि ऑडिटर ने ड्यू केयर के साथ बनाना था और उसने वो ब्रोक हुआ, वो नहीं बना। लेकिन स्टिल थर्ड जो कंडीशन है वो फुलफिल नहीं हो रही कि उनको लॉस, फाइनेंशियल लॉस नहीं हुआ। इट वाज प्रूव्ड दैट द प्लेंटिफ्स would have bought the share capital of the company at the agreed price, whatever the accounts had said. Therefore, whether or not a duty of care existed was not directly relevant to the decision. एक्वायरर ने जो एक्वायर की है कंपनी को, वो बेस्ड ऑन द मार्केट प्राइस की है और उसमें ऑडिट रिपोर्ट का भी अमल दखल नहीं था। दो की पहली दो कंडीशन सेटिस्फाई हो रही हैं कि ऑडिटर की रिस्पॉन्सिबिलिटी थी ड्यू केयर के साथ ऑडिट रिपोर्ट बनाना और उसे नहीं बनाया, लेकिन स्टिल एक्वायरर को कोई लॉस नहीं हुआ, फाइनेंशियल लॉस। इस वजह से ऑडिटर जो है वो रिस्पॉन्सिबल नहीं ठहरा। duty of care under contract law members, now this is the condition जो कि इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट्स ने जो गाइडलाइन प्रोवाइड की हुई है कि मेंबर्स शुड कैरी आउट देयर प्रोफेशनल वर्क विद स्किल। नाउ मेंबर्स हियर मेंबर्स आर रेफर टू बी चार्टर्ड अकाउंटेंट्स, कि वो अपना प्रोफेशनल वर्क बहुत ज़्यादा केयर के साथ करेंगे, स्किल के साथ करेंगे, केयर, डिलिजेंस एंड expedition, and with proper record for the technical and professional standards expected of them as members। जो उनसे एक्सपेक्टेड है उस तरह से वो परफॉर्म करेंगे। द डिग्री ऑफ स्किल एंड केयर एक्सपेक्टेड ऑफ एन ऑडिटर in a particular situation depends on the circumstances. There is no general standard of skill and care. The auditor is expected to react to the situation and circumstances he is facing. तो अकॉर्डिंग टू सिचुएशन जो है ऑडिटर ने उस लिए अपना स्ट्रेटजी बनानी है और उस तरह से परफॉर्म करना है, अपने स्किल्स यूज करने हैं जैसे भी कंडीशंस डिमांड कर रही हैं। फाइनली, हाउ टू मिनिमाइज द लायबिलिटीज ऑफ एन ऑडिटर। ऑडिटर के ऊपर जो उसकी लायबिलिटीज हैं जिसकी वजह से उसको फाइन भी हो रहा है, उसको पेनल्टी भी हो रही है, किस तरह से उसको मिनिमाइज किया जा सकता है। नाउ दीज आर द गाइडलाइंस हाउ टू मिनिमाइज द लायबिलिटीज ऑफ एन ऑडिटर। Number one is not being negligent. Auditor must not be negligent. He must be very careful. And similarly, the auditor must follow the ISA standards, which is Institute of Standard Auditors. International it is International Standard Auditors. So the auditor must follow the standards of the auditors, international auditors body। एग्रीइंग दी एंगेजमेंट लेटर, जो एंगेजमेंट लेटर कंपनी इशू करती है ऑडिटर को और उसमें जो कंडीशंस रखती हैं उन कंडीशन के साथ एग्री होना चाहिए, इसको फॉलो करना चाहिए। डिफाइनिंग एंड रिपोर्ट द वर्क अंडरटेकन, डिफाइनिंग द पर्पस ऑफ द रिपोर्ट बाय लिमिटिंग लायबिलिटीज टू द थर्ड पार्टीज, जितनी भी हो सके उसको मिनिमाइज किया जाना चाहिए थर्ड पार्टी का जो भी उसके ऊपर कंसर्न है। बाय डिफाइनिंग द स्कोप ऑफ प्रोफेशनल कॉम्पिटेंस, और प्रोफेशनल कॉम्पिटेंस का स्कोप बता देना चाहिए कि मेरी कॉम्पिटेंसी क्या है। तो ऑडिटर जो है इन तमाम गाइडलाइंस पे अमल करके अपनी लायबिलिटीज को मिनिमाइज